Hello, everyone, and thank you for joining us for today's Coffee Talk session with our host, John Paquette, and AB Enzymes' Kim Carvalho. Before I get started, I have a few housekeeping items I'd like to mention. First, this session will be recorded and should last about 30 to 40 minutes and will conclude with a Q&A session. If you have any questions during the session, please add them to the Q&A box in the control panel to the right of your screen. If you're having any issues, please add those to chat and I'll be monitoring that throughout the session. If we don't get a chance to answer your questions, we'll reach out to you after the session has concluded. Lastly, we will send out a recording of the session in the next few days. Again, thank you so much for joining us, and now over to John.
All right, thanks very much, Jen, and thanks for everybody for joining our Coffee Talk session today. I do want to mention that we were having some technical difficulties with the webcam, so we opted to just switch them off and show this image of the registration page here instead, so nobody is missing any video if you're expecting to see images. We do apologize for that. As Jen mentioned, I'm John Paquette, the VP of Solution for TIS's US market. I'm the host of this Coffee Talk, and with me today is my co-speaker, Kim Carvalho, who's the Global Finance Controller for AB Enzymes. And Kim, welcome to the Coffee Talk. Maybe you could just take a moment here to say hello to everybody and introduce yourself a bit.
Hi, everyone. Yes, as John said, I am Kim Carvalho from AB Enzymes. We're a company based out of Germany, but we have regional offices all over the world. And I'm based in one of the regional offices in North America, Plantation, Florida. And yes, Global Finance Controller, and been with the company about 6 years now. So look forward to this coffee talk.
All right, thanks, Kim. And just to frame up the conversation here, AB Enzymes, they embarked on a payments optimization project with us over the course of the last year, really, that was really focused on automating and standardizing their payment processes really across multiple different geographies. So I think during the course of the project, we addressed banking relationships in the United States, Asia, Europe, and Latin America. And Kim really ran point on that project in terms of orchestrating the rollout efforts from the AB Enzymes side. Of course, working closely with colleagues globally to reach their project objectives. And, I think in general, in this particular project, what I really noticed is that AB Enzymes had a really clear vision for what they wanted to achieve, and they were able to execute on that in a really effective way. Although all projects really have their lessons learned and, things you kind of wish you had known in advance. We'll probably get into that a bit during the course of the conversation here as well. But just generally, this is why we thought this would be an interesting story to highlight, and I hope that we touch upon some helpful topics for anyone looking to do something similar within their organization. So with that, we'll jump into some of the discussion points here. Kim, I think, from our initial discussions, even before you guys became a customer, and certainly as we got into the onboarding process here, it was really clear to me that your initiative was, very much grounded in enhancing your financial controls across the organization, right? And I think that really shaped the project approach. So maybe we could talk through that a little bit. And, what were your driving factors really undertaking a payments optimization project?
Correct. So, I mean, and in any organization, a lot of driving factors is audit points. So we actually had an internal audit point where certain, in terms of data being uploaded into the banks, whether it be an Excel spreadsheet from the ERP system or manual data entry, wasn't the most optimal. So as part of a remediation to this audit point, our CFO gave us the task to basically say, why can't we find a way to globally harmonize our processes, our payment processes, as well as the banking process. And as I said, we have offices in Brazil, in Shanghai, Singapore, Finland, Germany, and North America. So how can we streamline and globally harmonize these processes, which is pretty much the initiative that we had, since the pandemic, was something that we were pushing a lot on. Since everybody was working remotely, then we were more globally connected. So part of that was forcing us to look at our processes and trying to find some global harmonization with it.
Yeah, I mean, you touched on some great points there. You mentioned you guys have, multiple different regional finance teams, and really, just generally, you guys were looking at some way to unify those processes. The pandemic obviously escalated that process for a lot of organizations and brought to light how important it is to have one unified process across the company. So, one common theme we hear from a lot of companies is that they're looking for ways that they can kind of put in place central control over some of their more decentralized processes, and still leave these kind of being managed by local teams, right? So if you think about it, there are a few different ways that organizations look to manage their finance teams. You can fully centralize all your finance and payment processes. You can put in place, a few different regional shared service centers that kind of, somewhat centralize those processes for certain regions at least. Or you can run things from a more decentralized approach where you have regional finance teams that are really involved in those activities and maintain kind of autonomous control to some degree. And we talked to a lot of companies who see the benefit really in that decentralized approach. You have individuals who are really able to form relationships with their suppliers. They understand the local regulations right around banking and payments, and it becomes a really effective thing to do. But meanwhile, you have a corporate organization that wants to maintain some visibility and control over that process, or at least kind of hand down some standardized controls and things across the entire organization. So you look to kind of strike this balance of control without getting too much in the weeds. So just kind of curious, was this a major consideration for you guys as you kind of evaluated this project?
Yes, it was. Because, everyone had their own way of, we have an internal control framework that we, audited and managed against, but everybody had their own way of meeting those controls, and also the different banking relationships they had in their respective countries. So back again to the expectations of the CFO, he was wanting to see this global oversight and an overall cash flow, because that's another thing that came out of this pandemic, or during the pandemic. How were companies doing in terms of cash flow? How were businesses being affected with lockdowns and the parts of that? So it kind of forced us to be have this overall view. And what was the main driver in finding this is really to which company had that global outreach, which company was able to provide the global support. And in doing our research, because we looked at a few, and it came down, TIS was in the top 2 runnings. And one of the things that kind of put you guys over the edge was not just the global outreach, but the sense of a more cohesive and not really on too enterprise-like approach, where it's like, well, this is it, we're going to hand it to you and you figure it out from there. You seem to be more in tune with making sure that the project meets the needs of the customer, and not just applying your solution and saying, okay, see if it could fit into your business model. So that was really what kind of pushed us to accept TIS.
That's great to hear, and it's definitely something that we strive for. So glad that we were able to kind of accomplish that for you guys. And so, you have this assessment process, you identify, I guess, some things you guys would hope to improve from a control standpoint and maybe an automation standpoint as well as some factors that came in as a result of the pandemic that you realized, okay, there's an increased need to have visibility over our cash flows, right, our cash positions across the company. But ultimately, I guess, what process did you guys go to figure out what you wanted the future state to look like? So you've identified the deficiencies. How do you know what the future is going to look like? Was it, internal, external auditors, conversations with peers, consultants? Just kind of curious if you guys had any outside or inside influence there.
Sure. We had internal auditors. Those were the main external stakeholders in this, because we had to make sure they were bought into the solution, because obviously we don't want another audit point. But also it was just internally, how can we streamline the payment process? Because what we recognize in doing our review of every different region, as I said, everybody was doing it differently, is that some regions were more automated than others. So, and we needed to find a way to optimize that and look for value add activities. So that was one of the other internal requirements we're looking at. How can we optimize our payment process, that it's not going to be as I said, either an Excel spreadsheet upload that can obviously have issues, or manual data entry into the banking portals. So one of the things that we loved about TIS is that, one, it worked with the ERP system SAP, which we use, but it seems like it was going to be a free-flowing sync between SAP, TIS, and the bank. And it has proven to be that. I mean, it's very, very seamless. I mean, for example, in the North American office, we don't have to spend, half a day getting payments into the system, into the banking portal anymore. You just click a button and your your payment run is sitting in TIS for your approver to approve. And what the other thing is, it's also allowing for a better workflow and risk analysis approach. So you can see all the approvals, you can set the proper approvers, and they don't have to necessarily sit in the region that you're operating in. So it's really allowing for this global outreach and global harmonization that we're aiming to achieve.
Yeah, and I appreciate the kind words. I mean, that's definitely what we strive for here. I think we refer to it in TIS as a frictionless flow of data, right? Really being able to facilitate the flow of information between banking partners and back office systems in an automated way. And likewise, like you said before, just that helping organizations achieve the level of visibility and control over their processes that they'd really like to. Also kind of curious, you mentioned this a little bit already. So the assessment process, really going out to these, regional processing centers, understanding the way that they're doing things today, how automated they are, what are their manual processes. I have to imagine there must have been quite a bit of discovery there, both initially before you guys probably undertook the project, and I'm sure that process of discovery, kind of continued into the onboarding process as well. So did you guys discover anything? I think that was a surprise, either good or bad along the way. So, we always hear about the situations of organizations finding something that's, too manual or more manual than they thought they were, or maybe even a little bit risky for their process. But also, anything good? Anybody have like a really good process in place that you guys realize, hey, we can kind of use this and maybe replicate it, globally to gain some efficiencies?
That's a good one. Good question. I think it's always funny, the bad idea, the bad apples always stick out, right? So I would say the bad parts of it we found out is really the different requirements in the regions. Like we found out in China, there's a special way they have to process their payments. And because of that, we had to figure out, we had to be nimble and figure out a workaround on that. So, and which proved to be, not as difficult, because in the end, all it means now that we're just doing a manual payment via TIS rather than the banking. But in the end, what it did is it allowed for a collaboration back into SAP. So yes, we're doing manual payments, but bank statements and the processing of that still will be reflected in SAP. So it's reducing the data entry of the GL postings, the bank postings, etc. I think probably what we did learn, if I'm being honest, is the best practices that the German and Finland regions had in terms of how they process their bank statements. So that actually allowed us to save a lot of time in that onboarding process. So what they used in terms of their mapping, their GL mappings, we were able to piggyback off of that and then provide that to the respective regions to just say, use this as a template and follow suit. So so that is one of the things we recognize that we kind of saved time on. In retrospect, I would have said, when we started this project, we went with one region versus the other. I think in retrospect, we could have started with a different region, probably with the European region, just because they are a little more mature than the other regions, and then build on their experience and their best practices, and then take it to the regions below that.
Yeah, I mean, I think that's actually great advice, really to give the listeners as well. As if you do have a region that's more mature, sometimes it's better to start there for technology rollout, because you do gain a lot of efficiencies and maybe can replicate some of the the best practices you uncover in those particular regions elsewhere in the world. But also, I mean, that's the point you made about uncovering some unique payment processes in some of your regions is interesting as well. Maybe it was actually beneficial that you guys had this kind of decentralized, structure in place for managing the finance functions, because at least the local teams understood those processes really well. You were able to uncover them quickly and, kind of think of workarounds for those processes without them becoming too much of a roadblock in the project. But yeah, I mean, definitely a couple of interesting points you shared there for that question. Another one that I have, I know that you guys really, and you touched upon this one a bit too, is you look to use the system to kind of almost hard code or administer your financial controls, right? So both around payment approval policies, but also around, new bank accounts openings, bank account management type activities and things like that as well. And, it seems like oftentimes we talk to organizations and they have a tough time they might have these approval policies in place, but they have a tough time making them more than just paper policies, particularly when they're managing things in a pretty decentralized way. You're often kind of at the mercy of the systems that those regional teams are using and what kind of controls you can put in place in those systems. And then those controls differ from system to system, obviously, right? So, but if you unify things through a technology solution, you can take these paper policies, program rules and workflows into there and kind of use the systems to administer those policies for you, right? And I think this is one thing that AB Enzymes did very well during the course of the project. But just kind of curious if you guys had some of those similar challenges of making your policies more than just paper policies, to start here before you undertook the project.
Yeah, we actually went through an exercise with the internal audit team to see which controls can we have paperless versus it has to be on paper. And you're right in terms of the regional requirements, because you have, especially in the Asia countries, you have to have a certain person on file, and it has to be signed off, and you have to have this this authorization document available, and nothing can be done without that, and it has to be hard-coded signatures. So we had the situation where paper was being sent from Singapore to Finland to Germany back to and then to China. It's like, really, in this day and age we still have to rely on paper, but unfortunately that's just the nature of those types of levels of controls.
Yep.
However, that was really just more for the bank's controls. Internally, we were able to adopt the paperless controls. And what TIS has is that that repository function, which we actually said, you know what, this is going to replace us sending an Excel spreadsheet around every 6 months, making sure it's up to date. We can grab, there's audit reports, there's audit logs, and that was part of our sell to the internal audit team on this. And it wasn't just internal audit, it was our security team, because the moment you mention treasury, you mention bank, everybody gets really, sensitive, and they're like, oh, what does this mean? And especially when you're saying your ERP system is talking to these external systems. So when we had a call with our security team, our IT security team, it did not take them very long to sign off on TIS because of the level of the controls that you provided, the ITGC documentation that you provided, your ISO paperwork, so and certifications. So in the end, we knew we were going with, a top-notch company that will allow us to, maintain that and even exceed the controls expectations from internal and external stakeholders.
Mm-hmm. Yeah, it's always one of those benefits that I hope organizations get from implementing a solution. You always think about the process automation and the increase in cash visibility in those, but also the ability to use technology to just sort of administer your controls for you is something that I think is one of the biggest benefits organizations can get, because at that point, once you kind of achieve that, the finance people can almost just sit back and just make sure those controls are being followed, right, rather than being kind of the ones pushing them out and trying to enforce them in a less than automated way, right? So something you guys did, I think, extremely well during the course of the project too. We talked a lot about technology, how it's facilitated controls, but I think we also saw that you guys did a really good job eliminating a lot of manual processes as well, right? So a lot of the risks that you identified were as a result of manual payment processes or upload processes. So obviously, a big project objective there was to get those payments to be as automated as possible and instituted as high a degree of straight through processing as you can. So curious, have you guys seen the benefits of this? And always, I think during the course of a payments automation project, the finance team's looking to reach that utopian state of just completely eliminating manual payments, right? Not every organization gets there. It seems like there's always one or two that fall out, but at least you can do those in a more controlled and organized way going forward, and they become more the exception than the norm. But curious if you guys, have seen a lot of benefits through payments automation and a lesser volume of manual payments now flowing through your environment.
Oh, definitely. And it's funny you use the word utopia, because that was actually the project name we gave this for this onboarding project, Utopia. So we did see it was a dramatic decrease in the amount of manual payments, and unfortunately there was still some manual payments that had to go through just because of the nature of what they were, that they didn't necessarily were put into the ERP system. But what it did do in doing that, we were able to have more visibility and more transparency. So how we had set up the control for manual payments is that we carved out the approvers for manual payments to be 3 specific individuals. So it's no longer, a regional focus or, entity focus who's approving those manual payments. It went to as high as you can possibly go. And in doing so, it started to raise questions. Why are you doing this? Why can't you put it through the ERP system? What is this really for? Can you provide supporting documentation to support this manual payment? So it really has made our controls more robust, and also forced even the users, the data entry and the specialists, to pretty much think about, okay, do I really want this to go through manual payments? And that was intentional. We have an accounting center based in Finland, and our intention was, when it has to come to manual payments, and you had a payment sitting in North America, for example, you had to send that to the accounting center in Finland for them to process the manual payment. So we made it like a barrier to entry. So in other words, if you really, how desperately do you need this manual payment done in the system? Why can't it go through the ERP system and go through the regular processes and workflow approvals through there? So, and because of that, we have seen manual payments reduced dramatically.
Yeah, I love that. Make it hard for people to do manual payments and bring a lot of visibility into it. And it seems like, people no longer view it as this convenience that they can tap into anytime that they want to, and they're more apt to follow the real organization policies, which typically would route most of these payments through an automated method through AP or something like that. So that's really interesting. And the other thing is, given how focused, I guess, your project was on, improving your financial controls, it seems like there's a lot of different approaches or a lot of things that organizations looking to achieve in projects. It could be a higher degree of automation, or facilitating some sort of ERP rollout or global finance transformation, or just kind of improving the technology that Treasury is using on a day-to-day basis. But when you have a project that's really focused on enhancing controls, how do you know that it's like mission accomplished? You know what I mean? How do you know that you're kind of achieving or that you have achieved what you wanted to achieve in each phase of these projects? Is it, do you need to bring back in those internal auditors to assess what's been put in place, or how did you guys kind of go about that?
We did bring in internal audit, and what we did is we made them a partner in this project, because as I said, we didn't want to come out of doing such a transformation, as you just said, and then end up with egg on our face. So, and the other thing is, the whole point of globally harmonizing something you should be able to apply one processes across all the different regions. So if it passes in Germany, it should pass in the rest of the other regions as well. So that's why we took internal audit as a partner, and we had them step by step along the way doing understanding what we're doing, understanding the workflow approvals that we were setting up, understanding the manual payment process. We created workflows and process flows around that. So when we had to go to the live tenant, that was another interesting conversation we had to make with them, that we weren't going to be doing live payments. We're just basically putting on, walking into the room and putting on the light. They weren't as hesitant and combative, because we had kept them in the loop along the way. To be honest, since then, we haven't had an internal audit review of the process since we've gone live, but with everything that we've put into place with the ERP speaking to TIS and to the bank and to the workflow approvals, and comparing that to our framework and the controls within that framework, we know that we have met and exceeded that risk the objectives.
Yeah, I mean, I really think it's a great approach, is to have something to measure against from a control standpoint in terms of knowing where you were, where you wanted to get to, and if you actually achieved that during the course of the project. Also, incorporating internal audit as a partner in this, I think, was a really smart thing for you guys to do as well. It's common to see a lot of organizations who are undertaking a payments optimization project get, I guess, focus on the automation parts of it and things like that, which are natural, but then also the speed of the project obviously is always the main concern with a lot of companies that we work for. And it just seems like you guys had this really thorough understanding that, hey, this is your global payments process. This is a really important thing for us to get right? So we need to make sure we're measuring it along the way and achieving the right things to kind of get to where we want to. So obviously there was a lot done really, really well during this project. We talked about it during the course of the conversation here, but I think the listeners always love to hear about too, any lessons learned along the way, both in terms of, what worked well, what was kind of a good thing that you guys did, or, maybe even a few items that you wish you kind of had knew about in advance in hindsight that would have made the project run a lot smoother.
Yeah, I think one of the setbacks that with us, and as well as just the lessons that we learned, is truly understanding the setup that was required from an ERP system setup, to being able to know how the linkage between SAP and TIS worked. So we have an external SAP consultant that we had to utilize, and to be honest, that wasn't the easiest thing to manage, because now you're basically talking two different languages, right? Two different systems, and being able to match that and have them work together was a bit challenging. And going back to the original comment, where we could have started off with the more mature organization, where it would have, and we would have understand better how we should have approached that EDI between ERP and TIS. But once we got over those hurdles, and it has been like smooth sailing, because what happened was, because since we had this hiccup in the SAP to TIS configurations, we split the project into two phases. So we worked with the European and North American phase. We went live with those banks and those regions, and then we switched it to going live with the Asian Latin America bank in phase 2. And because of the lesson learned in phase 1 and what was really required to get the SAP configured, the phase 2 part is like, it's been a cakewalk. We haven't had the kind of issues and disruptions like we were having in those few months of setting up that configuration. So that's definitely a lesson learned. And if I have to give anybody one piece of advice, is just making sure your master data is correct. That's the key. garbage in, garbage out. And if you make sure that your home is all set up and clean and everything's and all the cobwebs are out, when you start inviting guests in, it's going to be an easier flow of information and transformation into the TIS and SAP configuration.
Yeah, that's excellent advice, I think, too. It's that master data really forms the foundation of all the validations for files in and files out of the two systems. So making sure that that's in order is great advice for anybody who's listening in here on the call. And I think that this takes us to the end of our talking points here, Kim. Thanks very much for participating in this coffee talk. I thought it was great. You brought up a lot of really interesting points. I think the project in general has some great lessons learned. So I hope everybody really enjoyed this session here. I think we'll check with Jen now to see if maybe we received any questions from the audience during the course of the presentation here, which we're happy to answer, or if anybody has any questions now, feel free to go ahead and type those into the chat.
Hi, John. Hi, Kim. Yes, we had a couple come in throughout the session. It looks like they're both directed to Kim. So right now we currently have 2, but as John said, if you have any, please feel free to add them in the Q&A box. The first question, Kim, for you is, how long did it take your team to define policies and procedures around your financial controls?
We had existing policies and procedures. As I said, we have an internal control framework that's driven by our parent company, and that's what we're audited against from an internal audit point of view. But in terms of defining that to match the TIS project, it took us about, I would say, 2 to 3 months, because going back to the comment I made about working with internal audit as a partnership and making sure we were using the right level of controls, doing a proper risk assessment, and then also trying to understand the translating how TIS terminology, the TIS workflows, and also the way they configured in their system, how it would match with what we needed to require. I mean, I think a simple example is just naming conventions. There's a role in TIS called specialist, but we don't have specialists. That's really data entry accountants or your AP clerk. So just those things of trying to translate what their roles look like in TIS to what our roles look like, and how probably we want to change those roles to reflect meeting the controlled objectives.
Great, thank you so much. Okay, the next question that came in, it seems like during this project you focused heavily on standardization and controls for your payment process. Were there any processes that you also considered that impact these teams during the project, such as the accounting process?
From the accounting process, yes, we looked into how the GL postings would happen. So in other words, how easy it would allow us to do our bank reconciliations. And that's another time saver. To the point that we are, going through this transformation of digital transformation right now in our company, and we're also, going into a system that will allow us to streamline our balance sheet reconciliation, so month end. And what TIS did is they actually saved us money, where because we are able to post GL entries on a real-time basis when the bank statements come in, you're daily reconciling your bank account. So when it comes to month end, your bank balance should not have a lot of movement. It should be just some bank fees postings, or unseen unpresented checks or unpresented payments, but it really wasn't. It has saved a lot of time when it comes to bank reconciliations.
Again, thanks so much. That was great. We didn't have any more questions come in, but thank you so much. And John, I'll pass this back to you.
All right, thanks, Jen, and thanks again, Kim, for answering those questions. Thanks for the audience for sending those in too. Those were extremely good questions, so we appreciate that. And I think that brings us here to the end of our coffee talk session. So Kim, just one final thank you. This was a great session, I think, and I really appreciate you sharing all your insights. And thanks very much for the listeners for tuning in. And we hope to see you on the next one as well. So thanks, everybody.
Thank you very much. Take care. Bye.